Happy Monday, everyone. All right, we have a lot of stuff to talk about, not to mention today is actually a little bit nipply, a little cold, even if you are in a warmer climate like me. A lot of stuff happened over the weekend. I did not post a bonus video yesterday. I actually pretty much unplugged myself from social media, let alone the many matrices out there. Um, I don't really want to dive too much into what's going on, like the Middle East, because of a couple things. The story keeps changing like every single hour, and this YouTube channel is not really designed to be necessarily a political channel, but we will be talking about it primarily, especially when we get a lot of data coming in the next week or so. But I mean, right now, the stocks that have been utterly hit the most, primarily SoFi has been utterly crushed, not to mention software, SaaS, semi stocks as well. They're not getting a gigantic big push down. However, at the open last night, SoFi did dip below 17 bucks, and I did have a overnight buy order, and my order was filled. I actually purchased some SoFi shares below $17 in the $16 range. I am just accumulating a lot of bonus shares of SoFi. If you are new here, welcome. I'm a raging SoFi bull. I am accumulating bonus shares. I already have a full-size position of SoFi, or rather, I should say, I've had a full position size of SoFi since, oh boy, like 2025, well over a year now, and I've just been accumulating bonus shares. I also did buy a Robinhood share this morning, because Robinhood went below 75 bucks. I'm going to be a buyer. But I mean, the other stocks that I own on this YouTube channel, and if you could do me a favor, smash the like button as well too. My throat is a little raspy today, so a little bit off myself. But SoFi, AMD, Palantir, Hood, Meta, Adobe, PayPal. It's geopolitical news are not really nosediving these companies. Now, SoFi actually was down close to about 5%, but they have recovered since the market opened yesterday at 8 p.m. Eastern Standard Time. Right now, it is 12 a.m. Eastern Standard Time. But we're not seeing the area that I've been talking about for the last couple months really getting hit gigantically. However, is the overall market kind of really getting hit per se? Well, the VIX is definitely up, and the VIX actually was up at one point, I believe, double digits. Now it looks like the VIX has definitely calmed down significantly. I believe the VIX was up by, not by 16%, I believe. Did the VIX spike 16% today? Oh boy, that would actually be really bad. Pretty sure the VIX was definitely up there. I believe I saw 12 or 13%, so the VIX is definitely coming down. Volatility index is basically inverse, or I should say the opposite. When the VIX goes low, that means stocks go higher. When the VIX goes higher, you should be buying stocks, okay? All these gigantic spikes up that we pretty much have on the VIX from back in November, I was buying thousands upon thousands of dollars worth of stock. Not to mention back in October, same exact thing. Liberation Day last year, I bought over 6 figures worth of stock, hard cash. Don't trade on margin. Believe it's bad JoJo. I've actually gotten some negative feedback from saying that. You do you, but me personally, I would rather very much play things safe. And sure, I mean, hey, SoFi, if my stocks go down significantly, I'm just going to be accumulating more shares. But as for the VIX, the VIX is definitely looking like it's coming down. The news is utterly changing within the hour. So I'm not, I wouldn't be surprised if the friggin' news has utterly changed. Honestly, I wouldn't be surprised if Iran is close to fully surrendering, which is what the Trump administration is really going for now. I wouldn't be surprised if that comes within the next couple days or maybe a week. So a lot of this is just really geopolitical, which is just buy the dip opportunity. Although we're not really getting a gigantic dip in a lot of beaten down stocks. And it's getting harder to send these stocks down, okay? The stocks that I cover on this YouTube channel, very much big tech, very much SaaS, software, very much semis. They're stocks with tremendous amount of growth rates and also a very high forward PE. Now, if you go to other stocks in the market, you could very well be experiencing kind of very much a hit. But right now on the SPY, we're very much holding above the 100-day moving average, which is not fully up there yet to really continue a bullish cycle. We're very much in a range on the S&P. But I mean, the Qs are not experiencing a gigantic swoosh down. Same thing with the Russell, IWM, Russell 2000 small cap stocks. A lot of these lines that I drew are actually, SoFi. Hold on one second. Okay. Like I said, we could be very well getting news like by the hour of anything geopolitical. So it's a little crappy per se to really be making a lot of like projections just yet. But I really feel that the overall market is not sensing this is World War III, and I'm not really getting that sense too. There have been U.S. service members killed, which is definitely tragic. I'm an Afghan vet. War is never good at all. If we can keep the U.S. casualties significantly to a 0 or low, that is beyond a win. But I mean, overall, it's trying not to really dive into politics here. It really is a strong consensus between both sides, whether Republicans or Democrats, that this is probably not going to turn into World War III. Because if it turned into World War III, hypothetically, it would be a utter disaster for the midterms, and it would be an utter disaster for 2028. Like, if this turned into World War III, forget about it. The Republicans are losing the House and the Senate, and they're not going to be winning 2028 election whatsoever. I myself do not believe that war is the answer at all, and many other Americans as well too, especially veterans like myself. It's not a pleasant style of thing to actually go through and witness. So I think Republicans and Democrats, or just people in general, are just sick and tired of just war-field nonsense that we've been experiencing for the last like over 2 decades now. Keeping this to just a very quick operation, kind of like when was the last Iran strike? I believe several months ago, back in was it the summer of 2025? Summer of 2025, later 2000. I honestly really can't remember. Everything is just kind of really a blur these days. But we're not seeing really a gigantic sell-off like a lot of people are really calling for. Now, like I said, the VIX is definitely spiking. You have oil definitely increasing. You have Palantir, which is definitely increasing because of a buy call of 150, which the sell-off from, I believe Palantir was at 160. Hold on. Water cheers. The fact that Palantir put up the best growth rates ever, 70%, and they got wrecked, just, it's not good. NVIDIA put up the best numbers ever. Obviously, they're rebounding a little bit of green, but, I mean, they sold off like a total of 8% the last couple of trading days since their earnings. Like, if NVIDIA is such a great company, what is going on? SoFi is very much recovering right now, which is amazing. But I did draw some lines about Friday pre-Iran, and it looks like Palantir's above this line. We have SoFi recovering. AMD, basically holding this line, did dip below. And then Robinhood. Like I said, I'm going to be a buyer in Robinhood stock. once it gets below 75 bucks. Obviously, we are nicely recovering here. Meta is just very much holding. Adobe, I'm going to be buying very much more heavier after earnings. I really want to see what is really going to happen after earnings, because pretty much Salesforce, after their earnings, they went down, and then they ended up having a green day to rebound. Now they're actually a little bit like in the red. So I really want to see, before I dive really more into it. And by the way, Adobe is a buy right now. Adobe will be a buy after their earnings. Adobe is oversold. Adobe is, call me crazy if you want, but Adobe is going to rebound to the fives, the mid fives, and the high fives, maybe even 600, over maybe into the end of this year, maybe next year, once this SaaS apocalypse basically pretty much ends. So I just really want to see if we actually dip a little bit after earnings, and then I'm going to be very much accumulating more Adobe, increasing my position overall. But otherwise, as for this channel profile, aka public profile account challenge, if you are new here, you can definitely subscribe, which is entirely free. Basically looking to take this amount to 6 figs in the course of 17 months. The account challenge started January 2nd of this year. SoFi has actually been hit tremendously on here, but the fact that my strategy is very simple on SoFi. On my private account, I own 1,642 shares of SoFi. 142 shares accumulated as bonus shares. I ended up filling a full position size all throughout 2024. And I mean, hey, like, my average on my private account for SoFi is $7.41. I built my position all throughout 2024, and I just accumulated bonus shares when SoFi would sell off. So on this account, I'm accumulating bonus shares significantly. If AMD honestly drops below 190, I'm going to be buying another share. Meta, I'm really good on. Because Meta came out with such an outrageous CapEx spending amount, capital expenditure they're going to be spending on data chips. If Meta rebounds definitely into double-digit gains on here for me, which I do see them rebounding, even though Meta could shock everyone. And I mean, that's the thing. You got Amazon spending 200 bill. You have Google spending 180 bill. Meta is spending over 100 bill, maybe close to 130, but that's really how the market is going to test them. And the reason Zuckerberg didn't give a precise number is because maybe the market, pushes their stock down, and then Mark is going to say, hey, we're going to lay up on the spending. Do you believe in AI? That is the play and the bet. If you believe in AI, well, Amazon, Google, and Meta's revenue is going to be accelerating like friggin' crazy. Sure, they're going to have to write off a lot of tax deductions on all these chips, but is their growth revenue going to accelerate to justify the spending? Some people believe it will, some people don't. Some people don't want to take the risk. But if Meta does go back into double-digit gains here, I'm going to do what I did a couple weeks ago. Basically sell a share of Meta and put that into probably more likely into Adobe. And I see Adobe as a tremendous amount of better opportunity now than Meta, and primarily because of the CapEx spending. So Adobe, I definitely want to increase my position size on here. I would feel very comfortable for Adobe to be my third position size. Robinhood, obviously I'm beaten down in Robinhood, but I'm okay with Robinhood because it's a risk-on company. It's like a casino. Bitcoin is very much going through a bearish cycle. When Bitcoin recovers, and Bitcoin's actually very much in the green today. It's utterly crazy, right? When Bitcoin recovers, Robinhood is going to soar. So I'm okay with buying Robinhood shares. But if Robinhood's going to be below 75 bucks, I'm going to be a buyer. There might be a point in time if Robinhood gets really in the 80s, I'll buy when it dips below 80. But definitely going to be accumulating more of Hood. Palantir is a very one that I don't really talk about so much per se. I've been in and out of Palantir for many years now. I actually made a mistake. I was trading Palantir in the teens. Bought a lot of Palantir stock over 5 figures when it was 14, 15, 16. I sold in the high 20s, made 100% profit, a lot of money. Then I got back in the low 30s, sold in the high 60s. Once again, another 100%, made a lot of money. Then Liberation Day, I bought on 2 accounts in the 90s, 80s, and 70 price range. Sold in the 150s. I've made a tremendous amount of money in Palantir, but if I had held in Palantir, it would have been life-changing money, well beyond 6 figures instead of anywhere between maybe $20,000 to $30,000 worth of sheer profits. So Palantir is going to be a tremendously amount of hard stock to get over all-time highs. And for this account here, and I do see Palantir rebounding to the $200 probably in the next maybe couple months, maybe the next several quarters. Actually, let me rephrase that. 200 in the course of the later throughout this year. Okay, if this whole geopolitical argument pretty much happens like through the course now up to the second half of this year, because it will be really bad if this geopolitical stuff is going on during midterms. It is going to be a death sentence for the Republicans whatsoever. So if they can clean up this and get away from the SaaS fears, and next earnings, Palantir beats 70% once again, which is going to be unfriggin' believable if they do. They're going to trend back to the $200 level range very easily. For me personally, my game plan is to definitely probably move out some profits into different areas. Maybe even open another position here. PayPal is really a toss-up because I got to make a separate video really talking about them. But there could very well be a complete buyout of PayPal. And if that happens, then it's going to be a very quick execution on me. I actually ended up fully selling out one of my positions on here a little over a week ago now. Actually, not a week ago. Last Thursday. What am I thinking? Oh, man, my brain's all over the place. Last Thursday, I ended up selling out of Honest Company. They ended up announcing a share buyback. Their earnings was god awful. On a fundamental basis, they're losing revenue, but they're doing a share buyback because the company's market cap is 300 mil, and their cash on hand is close to $100 million. I'll say that again. Market cap 300 mil, cash on hand is close to 100 mil. The company has cash and they're not anywhere near bankruptcy. So that's one of the reasons why the stock pretty much popped and I was able to walk away with some profits. And I've already funneled that money into SoFi, AMD, and Hood. And like I said, Adobe is definitely going to be accumulating shares too. So that's basically pretty much my game plan for what I'm personally doing. Overall, we're not seeing a tremendous amount of like shock and awe. Okay. I really feel that Wall Street is projecting this is going to be a fast-paced recovery. And let's go ahead and be real about this situation. One, Iran's military has utterly been obliterated. There is going to be no land invasion from either side. It is strictly an air campaign. The devastation to their leadership. I mean, we have already taken out their top leaders and their assessors and everyone there. It's just really waiting to see, hey, how much can they sustain? because we're going for a full victory, no negotiations now. They're going to be waving a white flag. It doesn't mean the market is definitely going to shake things up, but I mean, the market is very much just not, but I could be entirely wrong. Right now, my stocks and positions have already been beaten down. So, like I'm saying, it's hard to get SoFi to be so low. My next buying level for SoFi is going to be low 16s. If it drops to $15, that is such a what are you doing, stock market? Like, give me a break, okay? Maybe I'd have to increase my SoFi position on this account to overtake AMD at that point. Like, that is just freaking silly, okay? Just unreal. Triple beating, their company is exploding, not even in a low interest rate environment. What is going to happen to SoFi when interest rates go even lower? Woo! I'll leave you all on that closing note. Okay, be safe, everyone. Remember why you invested into your stocks. Don't be shooken out of great buying opportunities. And stay real, work hard. You know, that's my philosophy in life. What I've been doing, I'm 37 years old. And I'm a very successful investor trader. So, hey, just stick to your game plan. That's all I got to say. I'll see you guys tomorrow with a brand new video on Taco Tuesday. Hopefully everyone is not feeling the weather so much. And later.